Hi, I'm Eng Sivyang. In these presentations, you're about to discover the tax saving strategies for small business. And what I mean by small business is like, if your business annual turnover is below 2 million, then you are classified as a small business entity. So if you are a small business entity, then what I'm about to share with you in this presentation is actually the tax concession that I'm about to share with you can actually apply to you. Just before I start, I just want to introduce a little bit about myself. My name is Eng Sivyang, and I'm the CEO and founder of TMS Financial Services Firm. We are a certified practicing accounting and financial services firm. You know how most small businesses are very busy in making money and they don't have time to get their financial organized. So what we actually do is actually to help small business owners to get their entire financial house in order, to help them to legally reduce their tax, to protect their assets, and to actually increase their wealth, so that they have time to actually, have more time to spend with their family, have time to do things that which is important to them, and so that they can actually have a quality life. So in these presentations, what I'm about to share with you is actually some tax tips, which is very important that you actually have to do before 30th of June. A lot of things that I'm about to tell you, if you actually wait till after 30th of June, it's going to become too late. So what I need to actually give you a warning is like, this presentation is actually for general advice only, and it's not specific advice to anyone's particular circumstances, because I don't know your special circumstances. So when you actually watch this, I want you to actually learn the things that I'm about to share with you, and then you can actually take this to discuss with your accountant to see whether it's actually suitable for you and whether you can actually use it. Okay, so let's begin. Okay, the tax tips. What I'm going to discuss with you, what I'm going to share with you, and it's all these tax tips that I'm going to talk about is, first, it's prepay expense, and I will explain to you what sort of expense you can actually prepay so that you can actually get the deductions for your tax. And another thing, secondly, is accelerate your deductions. Third, it's accrue salary and wages or directors' fees. Write off bad debts, write down your trading stock, manage your capital gains tax, and defer assets sales and superannuations and insurance. So I'm just going to go through this one by one and explain to you what I mean by that. Okay, first, prepayment. Okay, if you prepay your expense before 30th of June, you can virtually reduce your tax. And what sort of expenditure you can actually prepay, and for how long? You can actually, because you are an what we call a small business entity, you can actually prepay your expense up to 12 months. And things that you can actually prepay is like lease payments. Say you have lease payment for your equipment, for your car, you can actually prepay that for 12 months and you can get that as a deductions. You can also prepay your car registrations, your rent, your insurance, and interest. Interest is actually the big thing. You can actually prepay your interest upfront for 12 months, and then you get that, you bring that deduction forward. So you can actually reduce your profit, reduce your income, then you can reduce your tax. And another thing is business trips. You might thinking you're going to travel probably in July, and you can actually prepay for your traveling expense, your accommodation, your tickets and all that, and you can get a deductions for that. And seminars and conferences, training, and another thing is subscriptions. So all these expense you can actually prepay and to get the deductions. Another thing I actually want to mention is that it also depends on what structure you actually have for your business. The things that I'm going to share with you is like it actually can apply to all the different structures, but the end result is actually going to be different. Because say if you are a sole trader, even though you get all these deductions and all that and you reduce your profit, but you still have to probably end up paying 46.5% tax. But if you're a company, then you pay about 30%. And if you have a discretionary trust, then you can actually, if you after you deduct all your expense and you got your profit, you can actually distribute to all different beneficiaries and get that tax benefits as well. So everything that I'm just about to share with you can actually apply to all that, but the end result can make a big difference, depends on what structures that you're actually operating in. So it's very important to get the structure right as well. But prepayment is one. Now second one is you can actually accelerate your deductions. What I mean by that is like, because you are a small business entity, say if you actually need to buy some equipment before 30th of June, you might want to need some, equipment for your business. And if you actually, if the amount that you buy is actually below $1,000, you can actually write that off straight away. So that's extra deductions for you. So have a look. Things like, what I mean by that is that you only want to actually go, you want to go and buy things that, which is, you need it. And you don't just do it for tax purpose, if you know what I mean. Like, you just, if you actually need to buy some equipment anyway, so why not bring forward that? And what you actually can do is like, say if you have to buy some equipment for your business, all you have to do is that if you have a tax invoice before 30th of June, even you haven't paid for it, you can actually claim that deductions before 30th of June, but you need to have that tax invoice before 30th of June to be able to claim that. And another thing is that maybe, office supplies, stationery, some materials and supplies in your business. And another thing, it's very important, is superannuation contributions. You should utilize that, because if you're age about 50, then the maximum that you can actually contribute is 50,000. But if you're below 50, then it's 25,000. And you need, if your business is actually making a good profit, then you should utilize that. But if you're gonna contribute your super, then you have to do before 30th of June. And you have to be careful, like, you don't do it on 30th of June, because if you do it on 30th of June, your check, your money might not be presented before 30th of June, then you're not going to be entitled to it. So what I mean is that you have to make sure that the check has to be presented, the superannuation entity has to receive your money before 30th of June to be able to claim that deduction. But if you have a self-managed super fund, that means that you actually control your own checkbook. You also have to make sure that the money is actually clear before 30th of June to get that deduction, okay? So superannuation is actually a very good strategy to save tax, and you should consider that.